Hello, everybody, and welcome back to the channel. My name is Max Convexity. The name of the show is A Daily Covered Caller. It's 9:16 here in the Central Time Zone, Austin time. A little bit earlier than I normally do this update, but let's see what these high yield funds are doing. We're going to look at the buffer report. We're going to look at volatility. We'll see what NVIDIA is doing. Of course, they have earnings today. Let's start with Defiance, of course. All right, Triple QY. These guys sold options. The price they got is 90. Yesterday they got 89. But if you scroll up, you can see they've been getting a lot more than 90 lately. Volatility has come way down. It's about it's a third of what it was on the 7th right now. Just, this option is a third of what they sold the option for on the 7th. Of course, that doesn't surprise us. When the market drops, volatility pops. Okay. So these guys sold the 19,620 strike. Unfortunately, the NASDAQ's trading at 19,469. So let's get a chart up here on that. Looks like the NASDAQ selling off. Oil selling off too, it looks like. All right, well, yeah, the NASDAQ selling off, but it's not a, I've seen a lot worse sell-offs. But in any event, it has some work to do. The market needs to rally back to this yellow line, at least to break even or above to make money. Okay, so now let's see what kind of shape JEPY is in. These guys sold options for 15, same thing. Volatility is pitiful lately. They sold the 56.30 strike, so 56.30 is the max. It's where max profit is. Well, right now the market's trading at 56.17. So what is that? 22 something points in the money. 22 point something, or I'm sorry, 12.81. My math in the head's not going great this morning. The good news is this fund's up at $1.01 on an earnings per share basis. Triple QI is 42 cents positive on an earnings per share basis. So, I mean, that is good news. So we'll see. This fund has some more work to do by the end of the day, but we'll see if the market keeps selling off. We'll look at the volatility report here in a second and see what we think the market's going to do. It looks like it's just grinding sideways to me. But it's overdue for a pullback. I mean, who knows? That probably is. Probably just going to pull back. We'll see. All right. So now let's look back here at IWMY. Like I always say, it's the most volatile. It's usually up the most or down the most. Well, these guys sold the 22.10 strike. They only got $12, which is pitiful. It's half of just a few days ago and a third of earlier in the month. So let's see. So the market is trading 21.69. I didn't see what strike they sold. What did they sell? They sold the 22.10. Oh, no. So what does that mean? It's 14 points in the money, 13 point something in the money. Yeah, 13.61. Okay, well, they were going for 600,000. They're actually losing 50,000 at this point in the day. Still up 4 cents a share on the month, the earnings per share basis. All right, so now let's check the chart and let's see what IWMY looks like. These guys trade Russell 2000 options, of course. RUT is the symbol. Same thing. It opened in a little bit of a down gap. SPX. I was looking to see if XPX gapped down. It doesn't. It did not today. All right, so now let's look at the dividends real quick, and then we'll go to USO. But I forgot to mention the dividend estimates. IWMY's estimate is $1.23 old shares, 369 new shares. Comes out to about 111. And Yeah, just making sure it's correct. Yeah, okay. That's pretty good. Triple QY's dividend estimate is $1.19 old shares, 358 new shares, 108%. JEPY's dividend is, let's make sure it's right, 83. Just making sure the math is up to date. Okay, 97 cents, old shares. God, I wish it was still $1. 290 new shares, 73.5%. Not bad. Not bad. Did everyone see? I did a video last night. Roundhill announced, and they announce once a week, obviously. But anyway, their dividends have been higher too. Although this week they came way back versus last week, but they've been on fire. Their dividends last week and especially 2 weeks ago were lit. Now remember, these guys just pay once a month, and so Defiance hasn't paid for the week that Roundhill has already paid for, and that Roundhill paid a gigantic dividend. A couple of weeks Roundhill did that. So those will both be in the Defiance paycheck, but so will this week's crappy premiums. So it all averages together. But for JEPY to be above $1, that's 76 cents was the recent high. So I mean that's insane to if it can be, or it's not above $1 anymore, for it to be even close. So declaration date's the 30th. So I guess we trade today the 28th and tomorrow the 29th. And just in case they declare it first thing in the morning on the 30th or something, I'll make my official dividend prediction show tomorrow on the 29th. And I'll make sure all this math is correct. And we'll look at some other stuff too. All right. So now let's look over here at USOI. Now, these guys have been pretty active traders, but they've been racking up some losses here. So I'm trying to think of a better way to show this. So this is the whole month. I mean, they've had some wins too, but lately they've just been on a cold streak. Lost 230,000 the other day, but they opened up a new position at 77. They sold it for 122. The other day they sold some 79 puts for 127, and the market pulled way back, and they had to buy them back for 271. That created the loss, of course. But the day before, to be fair, they sold some 74s for 173, bought them back for 5 cents. So that was a huge win. In any event, they're getting big premiums, and the dividend estimate at this point in time is about $1.37. And I haven't even added today's in yet, but it won't make that big of a difference. It won't make that big of a difference. We can look at it real quick, though. We'll look at the chart and see what these guys actually did. So they wrote a 77 strike for $1.22. They wrote it last night, but it expires the 30th, which is Friday. So let's take a look at that and see kind of how that works when you write a put. Now remember, buying a put is bearish. So when you write a put, it's actually bullish. It's actually a very smart way to get long, because you're long, but at the same time you're trying to take advantage of time decay. So instead of buying a call option, which also profits if the market goes up, but you pay time decay. If you sell a put, it's a smarter way to do it because you're earning the time decay. All right. So they sold, that's the one they covered. Hang on here. So right now they have this, they have the 77 open. I was making sure the chart's correct. All right. So you can see their profit box, the oil's at 75.09. They need the market to turn around a little bit, or this trade could turn into a loss. We'll see. Oil's been real volatile and been all over the, it's just been chopping back and forth between about 80 and 70 and 80, or USO has anyway. this is roughly correlated to oil futures. But I mean, it's roughly correlated. All right. So that's good though on the dividend. The $1.37 will work. So now let's look at the buffer report and see what's going on with some other stocks. All right. Well, let me hit refresh and make sure this is fresh data. The buffer report, when the market's only been open an hour, especially when you consider the data is behind 20 minutes, the quotes are behind 20 minutes. Sometimes it's not significant this early in the morning, but let's just kind of see what's moving. Yesterday it was Bitcoin and it was moving down. It looks like that's the same thing again today. Let me get this out of the way so we can see the legend there. YBTC, Maxi just absolutely getting killed. Although they're showing buffer, I mean, it's great. They aren't down as far as much as the index is. USOY, we just looked at that. That one was selling off today, and it's under the profit box, and that's why it's showing a loss. However, it's not losing as much as the index is, which is good. Okay, so over here on the left, we have S&P, and the S&P is down a dime or 10 basis points. Market's just, JPI's up. It's too early in the day to really tell. Let's just look for standouts. I bet that's a stale quote. I bet SVOL's not really down. We're going to even stop looking at this because I bet this is wrong. Now, let me show you. I mean, this is early in the day. There's no way SVOL's down. That's probably, it probably just hasn't traded yet today or something. All right. Or the feed hasn't updated the price for this morning. If you look at the VIX term structure, this is a good indication for if the market's, what the market's going to be doing, one, and two, you can also tell how well SVOL and ZIVB should be doing. SVOL and ZIVB, they profit off the steepness of this curve between October and September. SVOL sells October and buys September, but they basically play the decline. So the steeper it is, the more money they make typically. Same thing with ZIVB, but ZIVB is playing, they're playing, let's see, what month is that? Is that 2, 3, 4, 5, 6? They're playing March through January, but same thing, it's sloping down, and it slopes down about 80% of the time. It's an easy trade, and that's why hedge funds do it. But in any event, it's cool that they made an ETF that does it now too. So that's SVOL and ZIVB. So while we're talking about SVOL and ZIVB, I built a special buffer report for them, and also to compare the Round Hill funds with JEPY, the Defiance Fund, and also iSpy. Those are all daily option selling funds. Well, in any event, this is the change from the first of the month is what the graph is showing you. At one point, ZIVB was down 22% on the month, but then you can see it was fighting back as the price recovered. You know, right now ZIVB is only down 2.74, so they're doing well. But the main thing about this chart is these single day stocks, which are the three on the right, are just killing it. XDTE's up almost 5% on the month. iSpy's up almost 3%. JPY's up almost 1.5%. It's a great month for these stocks, and especially when you consider covered call funds also profit off volatility, and so the dividends are going to be huge. Of course, the dividend is reflected in this price right here because this is the total return for the month. So as soon as a stock pays a dividend, like today, XDTE is going ex-dividend. So at the end of the day, their stock price that it closes at will also reflect whatever the dividend was. I think it was 31 cents for Q and 27 cents for whatever. It will reflect that in the price of the stock. Now at the same time, they also take that out of the stock and and put it in your account. So anyway, but it's interesting to see how these do just compared to each other. All right, so now let's look over here at looking at the VIX every day. And when the VIX is going down, it means clear sailing ahead for the market, and the VIX is going down today. So in any event. But whenever we see that start going up, I'll mention it on this report also. And also, if we see that line that I showed you over here, if that line flattens out, or as that line flattens out, and God forbid if it goes the other way, it means there's trouble ahead. It was doing that last month. I just wasn't showing it every day, but we'll start looking at the term structure every day, and we'll start looking at the price of VIX and VIVIX. But the price of VIVIX is as low as it's been since before the big blow up, since last July. So clear sailing ahead for right now. Now we'll see what happens. There was a little false alarm earlier in the week where the VIVIX popped up, and we can see the market did sell off for like a few hours. I mean, but it didn't really turn into a more widespread event. So here, the shorter term, the boxes are based on daily. It's looking at the daily volatility. And so because it's based on daily prices, it's later. This green line, or it's slower. This green line is the price of SPY. Okay. However, and these are just mechanical trend following systems that look at volatility, and it looks to see if people are selling volatility or buying volatility. The idea is when people are buying volatility, they're buying protection, and especially people that trade the VIX, it's a pros indicator. So if the VIX or the VIVIX is doing something, which is the VIX of VIX, it lots of times gives you a little head start on a little jump on the market. But you can see last year, the mechanical system on the 30-minute strategy gave a signal, and the SPY was trading at 5:59. That was last Wednesday at 11. Well, by the end of that day, it actually went up and was trading at 5:62. So it looked like a false alarm. But then the next day, the market sold off and went down to 5:55. But then the market turned around and came back, and then the 30-minute system gave a signal the other way. So now the 30-minute system saying buy, the daily system saying buy. So it's double green light. So green means go. So we'll see what happens. If this condition persists, volatility will probably keep selling off into the end of the week, and the market will probably rally into the end of the week. Of course, we have the big, the elephant in the room is NVIDIA earnings. And based on what happens, that could throw all this out the door. And the thing I'm showing you, the volatility, trend following, whatever, it can't predict the future. It's just showing you what has happened. So it's just a way to narrate what's going on in the market and try to align myself with what's happening in the market. But yeah, this obviously won't predict it. Although sometimes it can give you a clue, and it's just one piece of the puzzle, right? Okay. So let's see what else should we talk about? I was trying to get that volatility report down better to make sense. Hopefully you guys understand it. And from now on, I'm just going to it'll just be short. We'll say 30 minutes pointed up and dailies pointed up. And I'll show this little graph, and then we'll see what the broader market's doing. But let's look at the SPY. Let's see what the SPY is doing. I mean, so back here where the red line is where it gave this, sell signal. And it's looking like it was early, but who knows? The market could still sell off. It looks kind of like it's faltering here. It's probably just waiting on NVIDIA earnings. So that's going to be huge. All right. I might even go live after the markets. I don't know, to see what the earnings are. Okay. So let's see what else we can look at here. Okay. So there's the dividend. So it's 31 cents. I think I said 31 and 27. Yeah, well, this was 26. All right. So 31 for QDT, 26. So that's great. What else should we look at? Let's look at option strat really quick. And then we'll look back at the buffer report, and we'll see maybe if it's updated and it looks a little better. And then you guys can get out of here. I have a video to make today. I'm making a video about the SoFi fund, THTA. I'm going to shoot it as soon as I'm done with this video right now. So be looking for the THTA video. All right. Let's see. So let's first check the get out of jail free cards, the $1 million baby. So this trade that I recommended a long time ago is only down like $800 right now. You can see the profit, the profit and loss graph. You can see, it's down about $800. But this is a hedge for the end of the year. And this is what the profit loss graph looks like now. This is what it looks like as time goes by. But the idea is, if the market drops 20% by the end of the year, this option position will be worth 278,000. So your $1 million account will be worth 200,000 less, but you'll have this 278 so that you can pay yourself back with the 200 or replenish the account and then use the 78 for taxes. That's why I call it get out of jail free card. If the market doesn't crash by December, or let's say it goes down and then comes back or something, it's going to be this trade costs $32,000 and you're going to lose all of it. The premise of the trade is you're up 20% on the year in $1 million accounts. You're really trying to protect a $200,000 paper gain. So if the market doesn't do anything the rest of the year, your $200,000 gain, you have to subtract the 30,000 from it. You only made, this is like an expense. You only made 170, but still, say you made 17% on the year instead of 20. But on the other hand, it doesn't really cap you, if the market goes up another, Tom Lee says that Russell's going to go up 40%. He's one of the pundits on CNBC between now and the end of the year. But let's just say the SPY goes up half that much, just in this, and there's no way it's going to, but let's just say it does for some reason. So the SPY's at 550 now. So if it goes up 20%, it would be 100 points. So it would go to 650. Okay. Yeah, that's crazy. I just don't think it's going to do it. But if it does do something like that in that example, you wouldn't be pissed if you did this get out of jail free card, because you're up 20% right now, but then you spend 3% on this protection. So now you're only up 17%. But then if the market puts on another, 20% by the end of the year, then you're up 17 plus 20, which is 37%. Yeah. And you would have been up 40 if you wouldn't have listened to Max Convexity and put on this stupid hedge trade. But at the same time, you can sleep at night knowing if we do have a crash between now and the end of the year, you're covered and even your taxes are covered. So anyway, I really like that trade. We put on another one the other day for people that missed the first one, and it's not doing too well. New Year's Baby Part 2, it's actually down 13,000 right now. But I mean, when you put this on, you pretty much expect to lose the whole thing. It costs 33,000. It's about the same price. But I think it was a little closer to the money, or it had a little more protection, but for whatever reason, it's down right now. So, okay. So let's look. I know why it's down. It's down because I put it on like 3 days ago when volatility was higher. It's a long volatility trade and not selling volatility like you're supposed to. This is the trade where you're playing, where I'm being the dumb money. You're doing it on purpose, but this trade's going to bleed. It's a bleeding trade and you're doing it for a reason, but it's bleeding right now. We can see it bleeding in front of us. Here's another one. This one's down 4,000 right now. I've done 2 or 3 of these. I think this was the more recent one just cost $28,000, but it's down a little bit, but it's the same premise. All right. So that's fine. So then also, I'm going to be interested to see, NVIDIA's earnings after the bell. I made some content on a trade like this, a double diagonal profit and loss graph looks like this. So it's a play for NVIDIA after earnings to either go nowhere, go up as far as it wants, or go down, but not more than 7%. And I know if that goes down, it's going to go way down. It's pretty much a binary trade. I'm not saying this is the best trade ever, but it's the way I like to do earnings trades. It's a double diagonal, and anyway, I'll make some more content about it if you guys are interested. The ones of you that are can watch it there. All right, guys. Well, I appreciate you being here. So let's check the buffer report, and we're going to hit refresh and see if we can get a better, that just wasn't, see if the market's moving a little bit. All right. Well, SFAL down, maybe SFAL went X dividend or something. That's probably what it was, because ZIVB, which uses basically the same strategy, is up big today. I'm trying to catch the ones that win X dividend, but that's probably all it is. anyway, if you own SVOL, you know it when next dividend. So the AI stocks and FEPI kind of lagging today. Of course, they're selling crypto, so even YMAX is down. The inverse, YQQ's up, of course. Alti's getting murdered. And it's not starting out like a good looking day so far. But on the charts, I mean, it's not like it's not like it's selling off a bunch. This doesn't have far to go, and all of these would be in the profit. We'll see. It's all gonna hang on Nvidia's earnings after the bell. All right, guys. I appreciate you for being here, and I will talk to you later. I'm gonna go make that Theta video, THTA. It's a SoFi fund. Anyway, be watching for that video. Thank you very much.